We have fresh data that's just been released today that shows U.S. home sales have taken another sharp plunge and are actually down to levels last seen during the 2008 financial crisis. This is not good news for the economy, especially if we consider that real estate is one of the largest sectors within the U.S. economy. But what makes this so shocking is that we have learned that Canada has played a big role in why home sales are plummeting here in the United States. After all, lumber prices account for roughly 14% of the cost to build a single-family home in the U.S. So if Canada is jacking up the price of lumber, it makes sense that home sales would be slowing down because it costs more to buy materials from Canada. Right now, Canadian lumber is 3 times more expensive than it was prior to the pandemic. And it turns out that's hurting the U.S. housing market in a big way. In fact, the Wall Street Journal is reporting that Canadian tariffs are costing the average U.S. home buyer $36,000 more than it should. Today, we're going to show you the facts behind these claims. First, we will look at Canada's lumber crisis. Then, we will see how that affects the U.S. housing market. Finally, we will discuss how high mortgage rates are making everything worse. Start by asking yourself, is it normal for lumber prices to fluctuate this much? You see, in 2021, lumber futures rose over 400% and the price of lumber has remained elevated ever since. For instance, the price of lumber has risen 173% since 2019. Now, obviously, lumber prices don't go up or down on their own. There must be some type of catalyst causing such wild price swings. That's when you run into something called supply chain issues. You see, there were 2 major forces that caused lumber prices to skyrocket back in 2021. First, there were severe droughts in the Pacific Northwest, which is one of the largest lumber-producing regions in the world. According to the USDA, over 1 billion board feet of lumber were lost due to insect infestation, which was made worse by record-high temperatures. Basically, the drought killed off millions of trees, which reduced the supply of lumber. Second, demand for lumber increased substantially in 2020. You see, when the pandemic hit and people were stuck at home, many decided to take on home improvement projects. Some wanted to renovate their kitchens. Others wanted to add an extra bathroom. And of course, millennials wanted to build their dream treehouse. All of this created a surge in demand for lumber. And once you combine this with supply chain bottlenecks, you get a perfect recipe for higher lumber prices. But as you can imagine, this is a temporary problem. Eventually, the supply of lumber will return to normal. However, things could get worse before they get better. In British Columbia, for example, the supply of lumber fell 24% from 2020 to 2021. And that's partly due to wildfires that destroyed thousands of acres of forest land. But the bigger problem is the Canadian government is restricting how much lumber Canadian companies can export. In April 2022, the Canadian government announced a new softwood lumber export policy that limits the amount of lumber Canadian producers can sell to the U.S. at a discount. Here's how it works. If the international price of lumber is below a certain threshold, then Canadian companies can only export 90% of their allowable annual cut. However, if the international price of lumber is above that threshold, then Canadian companies can export 100% of their allowable annual cut. In other words, the Canadian government is taxing its own companies for exporting lumber below a certain price. For instance, let's say the allowable annual cut for a Canadian lumber company is 1 million board feet and the international price of lumber is $500 per thousand board feet. Well, under the new export policy, Canadian companies would only be allowed to export 90% of their allowable annual cut or 900,000 board feet. On the other hand, if the international price of lumber doubles to $1,000 per thousand board feet, then Canadian companies would be allowed to export 100% of their allowable annual cut or 1 million board feet. What this means is the Canadian government is discouraging Canadian companies from selling lumber to the U.S. at a discount, which has led to a spike in lumber prices. You see, it doesn't matter if lumber prices are $500 or $1,000. The Canadian government still allows 900,000 board feet to be exported. But if the price of lumber falls back to $500 per thousand board feet, Canadian companies will be forced to reduce their exports by 10%. And this is exactly what we've been seeing recently. In August, for example, the price of lumber collapsed to $414 per thousand board feet, which is the lowest level since March 2020. However, the Canadian government's export policy is limiting the amount of lumber that can be exported. This has led to a surplus of lumber in Canada. In fact, lumber yards across Canada are overflowing with inventory that they cannot sell. As a result, Canadian lumber producers are having to pay to store their inventory, which is costing them money. To make matters worse, Canadian lumber producers are also paying higher interest rates on their debt, which is adding to their financial burden. This brings us to the U.S. housing market. When lumber prices rise, it costs more to build homes, which means fewer homes are built. According to data from the National Association of Home Builders, lumber price volatility is already causing a slowdown in the U.S. housing market. New single-family home sales have declined 14% year-over-year, while existing home sales have fallen 6%. In addition, builders are cutting prices at the fastest pace since the start of the pandemic. Unfortunately, it looks like the housing market crash may be just getting started. You see, when builders pay more for materials, they typically pass those costs on to the consumer. However, there is a limit to how much buyers are willing to pay. And in this case, the limit has been reached. In fact, buyers are now paying $36,000 more for a home because of higher lumber prices. And that's according to the National Association of Home Builders. Obviously, this is bad news for both buyers and sellers. Buyers are paying more for a home while sellers are receiving less money. And the worst part is the housing market is likely to remain weak until lumber prices normalize. And unfortunately, there is no telling when that will happen. One thing is certain, though, the Canadian government's export policy is to blame for higher lumber prices. And that's why Canada is being labeled the lumber crisis. Let me explain. It turns out that Canada isn't the only country that's blaming Canada for the lumber crisis. In fact, the United States has imposed anti-dumping and countervailing duties on Canadian lumber since 2006. What this means is the United States believes that Canadian lumber is being dumped into the U.S. market at below market value. As a result, U.S. producers are being forced out of business. Now, it's hard to argue that this hasn't happened. Between 2002 and 2017, U.S. producers lost over $3 billion due to cheap Canadian lumber imports. And the U.S. Department of Commerce has even accused Canada of unfairly subsidizing its lumber industry. Of course, Canada disagrees and believes that the U.S. has miscalculated their subsidies. But this has led to an ongoing trade war between the two countries. In 2021, the U.S. and Canada imposed tariffs on each other's lumber. And this has created a shortage of affordable lumber in both countries. Unfortunately, the end result is higher prices for consumers. The situation is so dire that even Canadian politicians are calling for the export ban to be lifted. In fact, over 100 members of Parliament have signed a letter urging the Canadian government to remove the export tax. But so far, the Canadian government has ignored these calls. Instead, they've decided to double down on the export tax, which is only making things worse. And this brings us to our third story today, which is the collapse in home sales. Earlier this year, we reported that new home sales have plummeted to the lowest level since the Great Recession. And that's because rising mortgage rates have made housing unaffordable for many Americans. The median family now needs to spend 31% of their income on housing, which is the highest ratio since 1997. But the housing market crash isn't limited to new homes. Existing home sales are also collapsing. In September, existing home sales fell to the lowest level since the start of the pandemic. And that's because the housing market is a lagging indicator. You see, it takes time for higher mortgage rates to work their way through the economy. For example, homeowners who locked in low mortgage rates are unlikely to sell their home anytime soon. And that means there is less inventory on the market for buyers to choose from. In fact, inventory is at the lowest level since 1999. Now, some real estate agents are claiming that the housing market is fine. They're saying that the number of active listings is rising and that's proof that the market is stabilizing. However, this is misleading because there are still not enough homes on the market to satisfy demand. In a normal market, there should be about 6 months' worth of inventory. However, right now there's only a 1.1 month supply of homes on the market. This means that it'll only take 1 month for all the homes to be sold. And this is keeping prices elevated. And when you combine that with higher lumber prices, it's no wonder why home sales are crashing. Now, some people are blaming millennials for the housing market crash, but this is just nonsense. Sure, millennials make up the largest share of home buyers, but they're not buying more homes than previous generations. In fact, millennials are buying homes at the same rate as baby boomers when they were the same age. The reality is, millennials are facing headwinds that previous generations didn't have to deal with, such as higher home prices, higher mortgage rates, higher student loan debt, and now higher lumber prices. That's why home sales are plunging and why the housing market crash may be just getting started.